Good evening, everybody. Welcome to the first Tax Talk Tuesday of 2024. My name is Mike Rudy. I am a CPA and partner at Guyer and Associates CPAs in Northeast Oregon. And we have offices in Baker City and LeGrand. And our goal is every Tuesday evening during tax season to come in live stream for 10-15 minutes, talk to you about some topics that are affecting the tax season and filing, and answer your questions. So feel free to send in any general questions you have. If you have specific questions, please ask your tax preparer or schedule an appointment, and we will help you. So, anyway, so we're going to start out real quick with just some general observations of the 2023 tax season. And, even though it's 2024, it's the tax filing is for the calendar year of 2023. And I tell you, this year started out looking like a fairly normal tax season. Not a lot of changes on, from what we knew coming into the year. It really felt like the first semi-normal one since COVID hit. But things can never be easy. So our own Oregon Senator Ron Wyden and the chairman of the House Ways and Means Committee, Jason Smith, they decided they were going to introduce some legislation in January that was going to make some retroactive changes to the 2023 filing year and forward. And so that progressor committee got passed through there, went to the House of Representatives, and it passed. And so, it passed on January 31st, already a month in, and now it's sitting waiting to get voted on by the Senate. We don't know when that's going to be. There's estimates that it could be March before they do it, but we don't know. It was like a 50-50 chance that it would get passed. Now they're thinking that it will get passed. We just don't know when. And so there's some really important changes in there that are going to affect the 23 tax filing. And so the name of the legislation is the Tax Relief for American Families and Workers Act of 2024. So the main big marketing piece of this was it was going to change the child tax credit. It was going to increase what everybody thought was going to increase the child tax credit initially. Find out it's just going to increase the refundability. So the child tax credit, you get that when you have kids under 17 years old, and you make between 2,500 and you can make all the way up to 400,000 and still get this credit. And the child tax credit is $2,000 per child under 17. They've played around with it a lot during COVID. We had the advanced child tax credit, the increased to $3,600. They advanced half of it to you during the year. That went away last year, went back down to normal. This year, same thing. We started out $2,000 tax credit for any of your kids under 17 years old, but it's only refundable up to $1,600. So you can go through. You got $2,000 for the tax credit, but you're only going to get back $1,600 of it refunded. And so what this legislation proposes is that it's going to increase from $1,600 to $1,800, so $200 increase per kid. And so it felt like it was a really cool thing. Really not that big a deal, even though they had some stuff come out from when they introduced the bill that it was gonna take $500,000 kids out of poverty when they pass this and things like that. So don't think it's that big, but it's something. It also is going to increase $200 a year for the next 3 years, uh, actually just 2 years, because it's going to go up to the $2,000, full $2,000 when it's done. So that was the big marketing piece of this. But for accountants and for small businesses, the major, huge piece of this is that they were going to increase bonus depreciation from 80% to 100%. So, if you don't have a small business, you don't understand this stuff, don't worry. I'm not going to go into huge detail on it, but just know if you're a small business and you've taken, when in 2016, the job Tax Cuts and Job Act increased bonus depreciation from 50% all the way to 100%. And it's been that way through 2022 and 23. It went back down from 100% to 80%. And then yearly, it's going to go back down till it hits 50%. So this legislation reinstates the 100% bonus depreciation. What's so special about it is that you can take bonus depreciation and create a loss. And so normally you have what's called Section 179 accelerated depreciation. You can take, if you buy a piece of equipment for $100,000, you can take $100,000 worth of depreciation in the year you purchase, all the way down to where you have zero profit, right? But you can't force a loss with that. With bonus depreciation, you can. It's been a huge tool since it was introduced in 2016, and it's super important. I mean, I'm not gonna kid you. So right now, for a lot of small businesses that are kind of that would benefit from 100%, even over the 80%, say it makes that big of a difference. They're kind of really waiting on this legislation to see if it's going to pass or not pass. So I will tell you though, if you are ready to have your taxes done, go get them done. Do not wait for this legislation, especially with the child tax credit. Don't wait on it for the child tax credit. If they pass the legislation and you filed your taxes, they will automatically adjust it. Okay, that's on the child tax credit. On the bonus depreciation, we don't know how that's going to work yet. So if you file your taxes now, they change the law retroactively back. You can take 100% depreciation, bonus depreciation. I don't know yet. Nobody knows how they're going to work that if it passes later. Okay, so that is something that you need to talk to your tax preparer and discuss what you're going to do. But go ahead, get your stuff in, get the taxes done. I would encourage you to get them in as early as possible, get this thing done, because the IRS, if this does pass, the IRS is estimating it's going to take 6 weeks for them to retool their systems in order to get this in place and going. And for the tax preparers, everybody that prepares taxes using software knows that it's going to take a little bit of additional time to get that programmed into the software. Now, everybody kind of already has this on their, they know it's coming, possibly, and so that they're ready to do it. But they have to get the IRS their system in first, and then the tax software to follow. So, it's accountants and tax preparers, they hate retroactive changes. And especially ones that happen this late, it just throws a huge monkey wrench into the process. Okay, and so we'll see. I'll keep updating you on Tuesdays or on the Facebook page if I hear anything. We haven't heard much since this passed the House, but you never know. It could be taken up by the Senate tomorrow and passed and signed, and everything is rocking and rolling from there, but we just don't know. So, but that's the major legislation that we're looking at. There's other stuff in there, but those are the two big pieces: child tax credit, bonus depreciation. There's some research and development credits that we don't deal with very often. for small businesses, but there's some other stuff in there. But those are the two major pieces of that. So, yeah, just stay tuned. We'll keep you updated. We'll let you know what to do, but get your taxes in when you can. When you have your documents and everything together, go ahead and get them in. So the other major thing that happened for the 2023 filing is the Oregon Kicker Credit. Okay, and so every 2 years on the biennium, they calculate a kicker credit based on revenue. So the budget office for the state projects what the revenue is going to be over the biennium. If it's over 2%, if they collect more than 2% over the projection, they return excess, not full excess, but a bunch to the taxpayers. And so the last two, 21 and 19, we saw some pretty big numbers, we thought. It was in the 17% range. Normally it was running anywhere from 0 to 3, 4, or 5% in a normal year. The last two bienniums, 17%. Well, this year, the kicker credit is 44.28% of your 2022 tax liability. Okay, huge deal. Honestly, it's I've already seen some pretty massive credits, and these are tax credits. So had a question come through from a great client, and things get in the press and stuff like that. So this isn't something that the state government, Department of Revenue is going to send you a check on. It's figured at the time you file the tax, and it's actually a refundable tax credit on your Oregon Form 40 return. And so I'm going to real quick show you where you find last year's tax liability on your Oregon return from 2022. And so you'll see on line 22 of your 2022 Form Oregon 40, it's page 4. That is the number that you're going to use, okay? And you're going to multiply that number by 44.28%. And so, but there's even, so you need to know that number to do it. But then there's this really cool website that Oregon Live put together, and it's been out for a while. You can go in there. If you go to Oregon Live or just Google Oregon Kicker Credit calculation or something like that, it will show you the Oregon Live link to do it. And you go there, plug in your 2022 tax liability, and it will figure your credit for you. So that's something to look forward to. It was a big surprise until you really start thinking about, well, if they're returning that much money, it's $5.6 billion that Oregon is returning to taxpayers. And you start thinking about, well, why do we collect so much over what was projected? What really happened? And I haven't really dug into that to see the details, but it's quite a bit of money, and it's really helping people out on their Oregon returns this year. So especially small business owners, you tend to get hit pretty good on the Oregon side. It's been making a big difference. People are pretty happy about that. So anyways, there's not a whole lot of other things that changed. If there is some new residential energy credits, so if you made some improvements, windows, doors, HVAC, things like that, talk to your tax preparer. I may go into more detail next week or the week after on it. But there's some pretty good changes there. They used to have a lifetime cap of $500 for some of them. They changed that to where it's now you can go up to $1,200 of tax credit per year for some of these improvements, which is great. So if you're in that boat, talk to your tax preparers. Make sure you get them the documentation that they need. So it has to be completed in that year and paid for in that year. And you're going to want to take them whatever invoices or what, if it was a solar project, make sure you get them all of that stuff so they can plug it in. So other than that, there wasn't a whole lot of changes. There's some with electric vehicles and things like that. I don't want to get into a whole bunch of that because it's still pretty rare over here in our neck of the woods. I'll probably throw that in with the residential energy credits and something here in the next few weeks. But today I just want to check in and like I said, a lot of times I am relying on stuff that you send me as far as questions. So far, there haven't been a whole lot of questions or things that have come out of the blue from clients. But please, if you have some general questions, message me, post them on Facebook, and we'll talk about them. I won't mention your name unless you really want me to. And I've got some really, really cool clients that I would love to say, yeah, it's a great question from this specific client. So if you don't mind having your name put on Facebook or live stream or wherever we put this, then let me know if it's okay. So if anybody has any questions out there live right now, real quick, I'll answer them for the next couple of minutes. But otherwise, we will be back next week. I will update my Facebook page and the Goodyear and Associates page in Facebook. If anything changes between now and next Tuesday, really don't anticipate it going that fast, but you never know. Otherwise, everybody have a great week. Get your stuff in. If you have any questions on what you're supposed to be getting in, I may go into that next week too. Make sure anything that says important tax information on it, that's going to be your W-2s, 1099s, 1098 for mortgage interest statement. The one thing that a lot of people are still waiting for are the investment statements. So those generally come out anywhere between now and the end of February, okay? Because that's when they're supposed to have them out. And generally, we like people to wait to bring in everything all at the same time. But especially if you're a small business owner, have self-employment income, and there's accounting that needs to be done, I prefer, and this may not be the same for all the accounts, but I prefer that you bring in the accounting piece as soon as you can after the first of the year to get it going, because that's the most time consuming. And really, for most tax preparers, January is not a real hectic month. So we usually have some staff availability there until really things start rocking, which is right about now, but really mid-February into mid-March is when we get slammed. So I think also next week I'll give you kind of an update on what's going on in the industry. We're still hurting for staff everywhere, and there's some really shocking numbers of what's happened in the last 10 years with enrollments in college accounting programs and graduation rates, and people, decrease in students taking the CPA exam. And at the same time, we have baby boomers that are exiting the industry. So I'll throw up some graphics on there. It's pretty shocking. So anyways, everybody have a great week. Let me know, send me your questions, and I will talk to you later. Thanks, everybody.